Okay, and we're off. How's everybody doing today? Got a very, very important show because we have an extremely important week coming up with the Fed. This is something we've been waiting for a while. We watched the market action go this week. The CPI number came out, consumer sentiment came out. We had some shifts in the market, so I want to get right into it today. The first priority is going to be discussing the Fed. Things have changed. All right, we're not in the same playbook that we were in a week ago. All right, this week the pressure is has increased exponentially. Originally we had it could be between 25 and 50. It's probably going to be 50. Now we're looking up at 50 to 75, maybe more. So instead of thinking that this is going to be a bounce, we've hit a point where it's going to be a drop. The question is how much. So we don't really know if the drop is going to be extreme or if it's going to be kind of a sideways thing. But so far, the bulls have pulled back and the bears have gained momentum. So I want to talk about that today, all the factors that lead into that. Also, I have a watch list going. I wanted to talk about a few stocks. We've also got some crypto news. There's actually quite a bit of crypto news this week. And then a couple of little random philosophy and preparation points before we wrap things up. Also, I'm going to be streaming the Federal Reserve meeting on Wednesday. It's usually around 11:30. I'll probably be starting about 11, maybe a little before that. Really depends upon what's going on. But we want to hear what they're going to say, what the rates are going to be. When Powell starts talking, that's going to be really important. We're probably going to see some huge volatility this time, so I want to be ready for it. So we're going to talk about all that today. We're going to get ready for that stream. And this is an extremely important week, so you really need to have a plan going for your money. So let me move this out of the way. Let's take a look at the futures here. I have a new screen set up. It looks a little bit different. I'm actually doing this at a different location, trying to get more mobile with it, so bear with me if it's a little strange this week. But the first thing we have going here is the E-minis, the S&P. It's down a little bit, not that much. Doesn't really matter too much. The NASDAQ, down a little bit, just like that, but not too much. Crude, it's down a little bit. Bonds, they took a decent little drop, but not terrible. The Dow, it's down a little bit as well. Let's see. Also, we've got Bitcoin over here. What's Bitcoin trading at? 27K. Yeah, I'm not surprised there. It really hasn't moved that much. It's going to probably hang out in that 20K range for quite a while. Ethereum's down to 1452. It looks like on the futures. Oh man, that's come down a bit. The dollar, it's strong. And then wheat. Yeah, wheat's not really doing all that much. So pretty flat. Not a whole lot of movement. We got a Fed meeting coming up, so there will be some kind of volatility. It seems like the last couple of times, the 2 days leading up into the Fed meeting, prices have gone up for whatever reason. Usually there's a big sell-off right beforehand, and it doesn't stop until the Fed has their meeting and Powell starts talking. But the last two times there's been a little bit of a bounce. I'm not really sure why that is. I think it's either people wanting to get out of their positions, like they're short and they just don't want to be short anymore, or they think there's going to be a bull run, so they're buying in. I don't know. There's just a lot of adjustment going on, and it's a little strange. We're in a very strange environment, so I'm not surprised that those kind of moves are happening. So I'm going to be really careful on Monday and Tuesday. Probably not going to do a whole lot. I'm thinking about how I want to trade the meeting because I don't usually day trade. One of the only times I actually do would be during those Fed meetings because those are great opportunities for bounces. A lot of time what happens is people expect things to be worse than they are. Which this week that might actually be the right thing to assume, but we're not really sure. So we have to come in with a level head on this. But because of the pressure that's built up now, there could be some huge volatility. What happened last time was the typical thing. There's a little bit of a drop right when Powell starts talking, and then when people realize that he's staying on plan and nothing really big is coming, there's a pop. And that pop is a good opportunity to make money. Like last time I bought the Qs, I don't remember, but I made like $3 or $4 a share on those things just in a day trade. I was only in for like 20, 30 minutes. It wasn't that long. And I ended up getting out before the end of the day and thinking to myself, a lot of times these continue for the entire week. But that one didn't. That one popped up and came right back down. So that was really important when I saw that because that tells me that there's not a lot of support coming in for these things. A lot of times there's going to be bounces and things that you can trade off of for the rest of the week. But in this environment, it's just not the case. The fact that those buyers didn't come in for the rest of the week and it literally slammed right back to where it was the next morning, that told me that we're in a different environment. And then when we got to this week and everything came out that came out, I knew the pressure had been turned up quite a bit. So think of it like a hose nozzle, right? You got the little nozzle thing on the end of the hose, and you close it, pressure builds up in the hose. So what we're at right now is we're that hose where the pressure has been turned all the way up and the nozzle is completely closed. Hopefully they open up the nozzle properly so that we can let out some steam, because if they don't, the hose could burst. And this week was interesting. Okay, so we had a couple of bullish and bearish things happen that are all going to influence what the Fed is going to do on Wednesday. Because what's going to happen is they're going to meet. It's 2 days. It's like Tuesday and Wednesday, but they don't usually do the official speech and everything until Wednesday. So they're going to meet up. They're going to discuss everything. They're going to vote, and then they're going to decide how far are we going to raise rates. So we're not in the realm of are we going to raise rates. It's we're definitely going to raise rates. The question is how much. And up until this point, we had kind of a consensus. Let me, I pulled up this little, I made this little graph last week. Had some problems. I had to change it a little bit, so I kind of updated it. And let me bring it back on screen over here. Let's maximize this. So this is what we're looking at right now. So the federal funds rate, it's kind of a target range. If you look at the actual chart, it'll say 0.77, but the range is 0.75 through 1% right now. That's the target range at the current moment. So up until this point, we've had Bullard, Daley, Brainerd, and Mester, all Fed presidents that have publicly hinted at how they're going to vote, and they all said 50. So last week I had this at 50, and I had these at 50. But I've added a plus to them this week because it seems like the conversation is switching from 25 to 50 to 50 to 75. And that's important because I was saying before that if this thing goes up to 75, if they have to slam rates down harder than they planned, that's going to be a little bearish for the market. In fact, I think that's why things are being priced in like that. So what do we have here? What are your thoughts on holding as of right now, or is it better to pull back and wait till things settle? Okay, so that's a good question. That's kind of what I've been pondering for the past couple of weeks. My opinion is that if you have anything that you're kind of on the fence about, take it off the table right now. Anything that you're extremely sure about, things that you really like, those are the kind of holds you just want to hold. But we're in for some pain right now. This week has hit a point to where it's not a question of whether or not we're going down, which was the question before. It's how much are we going down. And if they slam rates down harder, then we're going to go down a little faster because we have some catch up to do. Inflation came back this week. We got the CPI number. It was the highest yet. So I put on some shorts because I was thinking, all right, the CPI number is probably not going to be good, but I didn't expect it to be the worst one yet. And it's only worse by like a tenth of a percent or something like that, but it's still higher than it was before. Actually, let me pull up the numbers right now. So the CPI came in at 8.6% year over year. The estimates were 8.2%, so that's 0.4 higher than the estimates. It's the biggest increase since 1981 when inflation was out of control. Let's see. Well, the Fed said it will go down by like 1%, and it went up. The Fed right now is they're basically playing catch up. Well, the Fed said it was gonna go down like 1%, and it went up. Okay, so you're saying the estimates. That's what they said. Yeah, the Fed did say they were a lot more dovish before, but they're getting much, much more hawkish because things are going faster than they expected. And because they were going with the more dovish estimates, things are kind of getting away from them now. That's what I'm talking about with this. We're going down. The question is how much. So as for whether or not you should hold everything, I mean, obviously that's up to you because, I'm not a financial advisor and I can't give you financial advice. So you have to figure this out for yourself. But my opinion is that anything that you can trim, I would trim. I've been doing that with everything that I possibly can right now. I want to be in as much cash as possible. I don't want to get out of everything because you never know. There's always the chance that it could bounce. And you also have to, like you saw with the Fed, they said one thing was going to happen and something different happened. So you never really know. You have to wait for the actual event to occur, which in this case is the rate hike on Wednesday. So that's what we're waiting for, is that rate hike. I've taken a bunch off the table. I actually got kind of lucky too. One of the stocks I want to talk about, Robinhood, this week, got hammered because of some SEC regulations that might be coming through the pipe. Because I was just worried about the market going down in general, I took off like 2/3 of my position a few days before that happened. I mean, it was already down a little bit, and I had taken some on a pop before, but I'm pretty much, I would say, about even on that one right now. I still have some of that left. I just didn't want to leave too much on the table because it's a stock that's going to get hammered. It doesn't have the kind of support that other stocks have. But my opinion is you're going to see some pain. Pretty much everything's probably going to drop as we go through the next few months. I mean, inflation took off. It's out of control right now. So they're going to have to do something that's going to push the market down because that is causing some serious problems. So we had the CPI. I think core CPI was 6%, headline CPI was 8.6%, and the difference between those two is headline CPI includes energy and food prices. Core doesn't. And the reason they exclude those is because energy and food are typically extremely volatile anyway. So sometimes everything could be fine with the economy, but one of those two things could be sky high and it could throw the number off. So they put both of them out as a way to give you a better idea of what's going on. So 6% is about where it's been with the core CPI for the past few months. And this 8.6 and the 8 point something is about where the headline CPI has been as well. So because of that, it's going to make the Fed more hawkish. So that's what we've been looking at this week. Everything that happened, I was thinking like, okay, is it a point for the hawks or is it a point for the doves? And in this case, everything but basically Target's inventory problem was hawkish. So if I'm going to go through everything right now, we had the consumer sentiment also come out, and this to me is actually a little bullish on the market. The consumer sentiment was 50.2, and the estimate was 58, so it's lower than expected. People are more bearish on the market now than they were a month ago, which is a good sign. Because if you want a market to rally, you need most participants to be extremely bearish on it. The more bearish they are, the more likely a bounce could happen. And part of that is because when people get extremely bearish, large entities start shorting things. And like right now is a good time to be short, especially if you're shorting premium and you're kind of ticking, day by day, you're getting that little bit of yield from your position, basically. So there are a lot of entities that are doing that and they're profitable right now. And as consumer sentiment gets more and more bearish, they're going to short into these things harder and harder. But at some point, there's going to be a floor, and those shorts are going to get squeezed. So the consumer sentiment being lower than expected is kind of a bullish thing, in my opinion. Now, it doesn't cancel out any of the other stuff that happened. Like CPI being worse than expected, that was the big news. Last week, I was talking about CPI, and I was saying, hey, this week is all going to depend upon that Friday CPI number. And if you look at the markets, what happened during that time? Let me pull up the chart here real quick. Let's go to the main chart, and let's open up the SPY. So if I zoom in here on the SPY, we're on the daily. You can see Friday, Thursday, Wednesday, Tuesday, Monday. So we kind of started right around this 411 mark. And we bounced around, and then Thursday and Friday we just tanked because people were concerned on Thursday that CPI was going to be bad, and they were right. But that's what this dump was on Thursday, and of course, once the CPI numbers came out, because they come out before the market opens. My time, it's like 5:30, I think, is when they come out West Coast time. But right after that happened, you could see that the market just was not happy about it. Now, most of the drop happened Thursday, and then there's a little gap here from this overnight deal. But this is what I was expecting. And I was saying if CPI is bad, there's going to be a crash. And sure enough, there was. Because we've been trading around this range. This little setup right here was going for, 2 weeks, basically. And we weren't really going out of it. Basically, every time the market popped up on these green candle days, I was shorting stuff and then taking it off on the days after that. Because I figure, if you can get a little bit of profit in a day, you might as well take it. Things are so volatile right now. I'm not expecting that this range is going to necessarily hold for that long, but it did. So it was a nice opportunity to just grab some shorts on stuff that I know, like Rite Aid, GameStop, stuff like that. Just pulled a little bit of premium out of the market, not a whole lot. Basically, a way to sit on the sidelines and just soak up a little bit of cash while I wait for this drop. I'm still very much invested in my long account, though. I trimmed some things. I have a growth stock that's up quite a bit, so I took all that off the table. I've been kind of sharing that one shaving that one off as it goes up, and now that it's basically at its peak, I just took everything off because I wanted to have cash on hand. I did add a little bit of crypto, which I don't think it's bottomed yet, but I did want to. I just want to take advantage of this. Every so often, I want to buy a little bit of crypto, and the long stocks, like my dividend stocks, any of some of the Canvas plays, all the stuff that's getting beat up right now. I'm just still adding to a little bit. And if we end up getting a nice big drop because of the Fed meeting or everything that happens after, then I'm going to start increasing my buying. I'm going to get a little bit more aggressive. I've basically been nibbling. If you look at the chart right here, let me back it up a little bit. If you look at how the chart's been going, I started nibbling somewhere in this mess over here. I was getting a little bit, and then it bounced, and I was kind of like, that's too bad. But as it was coming back down, I did a little nibbling here, and then after the Fed meeting, I got out for a while, and I started waiting until it was about in here to start nibbling again. So I've been buying in all this congestion, little by little by little, But what we're getting to though is we're starting to get down to these levels where things increase a little bit. Like the lower we go, the more resistance there's going to be because this was a time of extreme volatility, a lot of share buybacks, a lot of things that pushed the market up during 2020. And 2021 was lighter volume. but still, the lower we go, the more support there's going to be. And but here's the thing, though, there's a zone right about where we are, right below where we are right now, that has very low volatility, or I mean, sorry, very low volume. So we could actually crack through that. And once we start getting into maybe some of this stuff, and we start getting into the old highs, like one of the big points right here is going to be the previous high before the 2020 dump from the pandemic. So this 337, 338 mark, let's call it 340 actually. So right at about 340 is when things start getting real, because you can see right over here there was congestion when it hit that point after being thrown down so far. There's usually, when an old high is reached, there's usually volatility like this, but that also tells you that there are a lot of people that are exchanging shares. Shares are changing hands, and people's positions are starting. So all these people that got in right here and are still holding, they've lost half their gains at this point, and they're starting to think like, oh, should I keep it? Should I stay? Like, look at the question that you just asked, Kijiji. Everybody is asking that question right now. That's the big question, and the answer is I really don't know, but my opinion is it's probably going to drop. So anything you can shave, do it. But you don't want to, even if you keep everything and it drops and it sucks, you're like, oh, I should have gotten rid of it and bought it down here. It's not that easy. All right, because you're gonna if you try to do stuff like that, you're gonna sell and the market's gonna bounce, and then you're gonna get FOMO and buy in, and then it'll probably drop, which it happens all the time. So the best thing to do is just ignore the long positions that you want to keep. Know they're gonna be down. Know that your account's gonna shrink and shrink and shrink. But if you have the right amount in cash and the right amount in securities, it shouldn't be too bad, right? Just keep buying, like start buying things that you really want to buy, and get rid of the things that you're not sure about or you don't like. Even if you have a position that's terribly down and you just hate it, the best thing you can do is move it into something you actually believe in. Now, it might bounce when you sell, yes, but if it doesn't, you're going to be glad you did. And in times like this, you want to have as much cash as possible, and that's kind of what I've been saying for the whole year since I started this stream. I don't know, 3-4 months ago. I've basically been saying, as we drop, you know, get some cash, start looking at the things you want, and buy the solid stuff. Like, get the little trade, those little ideas that you get in your head. You think, oh, this might go up, this might do this. You start getting itchy to buy stuff when the things that you really like aren't moving, or you've bought everything you want of the things you like. That itch will get you in trouble. So just try to be calm with your buying. Buy the things that you actually like, not the things that you kind of like, right? That's the important thing. Like, shrink your number of total securities if you can. I think right now I had like 8, I think 7 or 8, and I've shrunk my portfolio down to about 6 at this point, because I've dumped, or maybe 7. I think I only fully dumped one of them. And that's not counting the trades. Those are just my long positions. So we're right here at this little bottom part. We had a little, let me zoom in a little bit. We had a little bounce. We spent a couple of weeks over here. So this is about a month ago. We were at this low, and we're just about to get down to it. We're kind of hitting that little wall right there. So this is an important point. And below that is not very strong volume. So there could be a nice quick drop. And I am so happy if that happens. I'm waiting for that. I really want a nice drop like that. So that's what we're looking at. The CPI, consumer sentiment, that just tanked the market. It's exactly what I was hoping would happen, and kind of what I thought would happen. Now, I wish I had shorted a little harder. On Thursday, I had some second thoughts. I was watching, I let some people get into my head. I was watching some videos, and they were talking about, oh, well, actually, there's all these reasons to be bullish on the market, and maybe CPI won't be as bad as you thought. And I thought, yeah, I'm a little exposed to the downside right now. So if there's a bounce, it would have hurt. So I took off quite a few positions on Thursday. And then, of course, boom, that fall happens. And I thought, oh man, I should have left those on and lightened up on Friday. But hey, that's the way it goes. You never want to be overextended, which I wasn't really overextended, but in this kind of volatility, I really wanted to be efficient. Like, I wanted to trim as much fat as I could. So, okay, we talked about those numbers. Very important. That's going to be a driver for the Fed to go faster than they thought. So put that in the column for the bears, right? The CPI number and the consumer sentiment, both are going to go in the column for the bears. The consumer sentiment isn't low enough to tell me that there's going to be a bounce right now. So I'm not going to put that on the bullish side yet. A lower consumer sentiment would be on the bullish side normally, but we're not there yet. So I'm keeping it on the bear side. The other thing we had, the World Bank cut global economic forecasts for 2022. So there's another signal for the bears right there. The World Economic Forum I'm sorry, the World Bank doesn't think that there's going to be as much growth this year, which they're probably right because we have insane problems with shipping. There's still all kinds of closing or all kinds of lockdowns going on. I'm not surprised that they did that. So that's another. So we got three things in the column for the Bears now. Also, we had Janet Yellen speak earlier in the week. She had a couple of interviews. One of the things she said that was interesting, and I actually didn't realize this, 1/3 of U.S. inflation is actually from autos, and that's mostly because of the chip shortage, right? So we have like things are affecting other things, and they're causing inflation in other ways. Like the chip shortage is causing a problem with autos. They can't produce them quick enough to meet demand. So prices going up with used cars and new cars like crazy, which is adding to inflation. 1/3 of inflation is because of these cars. So one of the things she was talking about was she wants investment in domestic semis. Right, and renewable energy, which would help on both those fronts. Like renewable energy would help a little bit with the oil situation, and the chip manufacturing would help with the autos and pretty much all tech. We definitely need more domestic semiconductor production in the United States because pretty much everything is coming from overseas. Like a big chunk of it's from Taiwan Semi and some of these other companies. I mean, there is some production in the United States, but nowhere near as much as we need. So that's one section of inflation that has nothing to do with anything else. So the other thing she was talking about, she kind of wants to ease some of the tariffs on China, which if you have Chinese stocks, that would be bullish. So her comments are a little bit bullish. And the SEC has been working with China for a while now to actually ease some of the requirements for their filing and their reporting because it would allow a lot more Chinese stocks to stay listed on the US stock exchange. Whereas right now they're not able to they're either not able or not willing to meet all the requirements, which normally would get you delisted. And that's because there's so much money in the Chinese economy that's also in the stock market here. It's all that is tied together. A huge portion of people would be affected if Chinese stocks were delisted. But still, the whole issue of tariffs and SEC filing requirements are weighing on all Chinese stocks, regardless if they actually will be affected by it, which they kind of will in a little bit. So, and that's the way the market works. The market will pull down similar things, even if those problems are not actually affecting those directly. They will just be affected by their neighbors. A rising tide lifts all boats and vice versa, and that's kind of what happens in an entire sector, even if a company's doing well. So she wanted to ease some of the Chinese tariffs, which a lot of these came on in 2018 when the trade war started. So some of those would be the things that would be eased, and I think some of them might even be expiring too. There were so many different tariffs, and they did them in so many different ways. I don't know everything that's going on with that, but I do know that in the general sense, in the grand sense, easing of those things is bullish. So that was another thing she was talking about. She also said, with more on the bullish side, that no way inflation is a decade-long problem. I mean, they've been so right so far, so why wouldn't they be right about this? Now, I actually tend to agree. I don't think inflation is going to be a decade-long problem. I think a lot of these are problems that we can fix. Most of them have to do with the lockdowns and shipping, and they're all kind of related. And we had a huge stoppage during COVID. And what's interesting about the economy is, and this I didn't realize this until I started getting into the markets and researching things. We don't necessarily have a lot of storage in the economy. We have what's called a just-in-time shipping economy. So if you think about product, right? If you think about a huge retailer that has a lot of product, they need a place to store that product until it's sold. And if you think about that, that means a huge building, that means workers to move it and maintain it. The new orders have to go in. There's just so much electricity, whatever other resources need to be dedicated to just storing these things. And that can be extremely expensive. So if you have a storage facility and you're paying month after month after month after month, that's going to be draining on you. So what most companies do is they get things just in time to use them and then get the product out the door so they don't have to pay for that storage. So having a just-in-time economy is great financially. It brings you more profit, but when stoppages happen, the chain that would normally be rotating gets broken, and it takes time for each link to get restarted because they don't have extra product. They have to wait for the link before them to send them the thing, and the link before them has to wait for the link before them, and it goes all the way down to the start of the chain. That's where we're at. So what do we got? Brigador LL. I think with autos and many other industries, they have learned that they can't get away with selling much less at higher margins. There's no incentive for them to increase production at the moment. Yeah, right now it's like the oil market right now. They're actually actually kind of liking the situation because they can. They can sell things for outrageous prices and people have to buy them because people need cars. People need to move from point A to point B. So, and it's the same thing with oil. Like the oil companies are loving this right now. They're drilling at maximum capacity. They're selling oil at a huge profit right now. They're paying back. They can hopefully, if they're smart, they'll be paying back a lot of the debt that they had beforehand because the oil industry is one of the most heavily indebted industries on the planet. I mean, there are so many companies that are barely surviving because they have a ridiculous amount of debt. I mean, it's expensive to build wells and extract and process all this stuff. You know, especially if you're a smaller company or a smaller group of investors and you're competing with the giants. I mean, there's a lot of debt. So they're loving this right now. And it's the same with the autos. Like if they had the chips, then I think they would love it more, but they're at a point where they have to sell these for more and the market demand is just driving things up, so they're just letting it happen, which for them is good, but that's not permanent. As soon as the chips start coming back in, that is going to go down. And that's why I agree with the whole inflation isn't a decade long problem, because the auto thing is going to be solved at some point. We just had all these slowdowns in areas that were critical for chip manufacturing. There were huge slowdowns. That's normally what happens when you have these kind of problems, and they will alleviate at some point. So yeah, there's another thing Janet Yellen said. So not a decade-long problem. The other thing she wants is deficit reduction, which would be great. I mean, every single year the United States adds to their deficit, and it's getting worse and worse and worse. So if we can reduce that deficit somehow, which I don't really know how, because every administration spends more than the one before it, regardless of party. So I don't know how they're going to reduce the deficit, because a lot of that is going to secret programs and research and stuff like that. That's why it's whole like, oh, $20,000 for a toilet seat and stuff like that. Yeah, that's because it's going to things that you can't have in the public eye, right? Like the military doing all kinds of crazy research and such. So to stay competitive with the rest of the world, that spending has to continue to go up. It's very unlikely that it's going to go down. So the cuts would have to come from other areas. Everything else has been cut really hard over the decades, right? It's at a point where it's like, what do you cut? I mean, there are government programs that are just money drains and they could be run way more efficiently. So fixing that would be a high priority. Although I don't think that's where the focus is. I think more of it is just on people getting elected and saying whatever they want to say to get elected and keep their little power trip going. So I kind of doubt there's going to be a deficit reduction. And the last thing she said, Janet Yellen said, was the burden of U.S. debt is completely manageable over 10 years, which is good to hear. Obviously, they're always going to tell you the rosy side of the equation. Like they're not going to give you the worst possible outcome. They're going to go with the better ones just because they want to keep you calm, and that works. Because if you go stirring up the pot all the time, then you might have actual problems. Because most of the time, people freak out over nothing. That's why the Fed was so slow to get to inflation. Like this last couple of weeks, I've just been seeing, oh, the Fed dropped the ball. Oh, the Fed, what are they didn't get in soon enough, which, yeah, they didn't. But normally they don't. That's what you normally do. You don't want to constantly mess with things. You want to see if things will return to normal on their own, and that's what they've done. And normal 9 times out of 10, that's the way you go because it almost always works. However, this time it is different. It's not usually different, but it is this time. So the other thing that we're looking at here is shipping problems, right? So President Biden said companies in control of the market are raising shipping prices 1,000% or more in some cases, and we need to do something about that. So yeah, we do. I mean, that's an insane amount. Like shipping is one of the biggest problems right now. Last year, the ports were extremely clogged. Things weren't moving, and some places were able to clear up again. But I think since China kind of relocked down and did their zero COVID policy, they slowed things down quite a bit. And I mean, there were stoppages and slowdowns in other places too. But that's the big one. I mean, we get a huge amount of our inventory from China. So them slowing things down and cutting off, our one of our main supplies, that really slowed everything down. So, and the other thing that happened though that was interesting was some companies overbought inventory while they could a little while ago, like last year and earlier this year. For example, Target. That's why they did so poorly. They bought a bunch of inventory, it showed up late, and it was out of season. So companies like Target, they need to have, clothing and things like that that are in the current style time period, whatever you want to call it. Like things go out of style quickly. So they need to have their inventory out there while it's still in style when people will buy it. Because as soon as new stuff comes out and people are looking at different trends, the number of people that buy that stuff goes way, way down. So they bought all these things, showed up late, they had trouble selling them because they were already out of style style by the time they put them on the shelves, and they took a huge hit for that, which means what they have to do and what they announced they're going to do is sell the stuff at a discount. So let me pull up Target real quick. So this was one of the only bullish things in the market this week. So when I was looking for reasons to think, all right, are we going to bounce after this Fed meeting, or are we going to go sideways, or are we going to crash? When Target came out and said, oh yeah, the inventories were too much, and we're going to have to sell everything at a discount, they kind of cracked down. They were bouncing a little bit after their earnings. Then they announced everything somewhere over here. I think it was like this day or this day, whatever. They said, yeah, sorry, we actually have too much. We got to sell it at a discount. We're going to make even less than we said just a couple of weeks ago. So that crashed them down even more, which is why I like Target in the long run. I mean, the more Target gets beat up, the better, because Target and Walmart are two of the main retailers in this space. I mean, Walmart's one of the biggest companies in the world, and Target is a fraction of the size of Walmart, but it's still big, and it has a potential to move. Like, let's see, how many shares does it have? So it has 460 million shares. For a company as big as Target, that's not terrible. That's why I like the moves on that one when it actually does move. And you can see, I mean, this drop was massive. I mean, it went from like 215 all the way down to 150, 160 the day that it happened, and it's been bouncing in that range. It's at the bottom of that range now. And if you look over back to, let's see, 2020, there was a gap up right here. And that actually makes sense why it jumped down. So as much as I talk a lot of crap about technical analysis, things like gaps are actually important because they tell you something. Gaps tell you that there were a ton of orders before the market open that were market orders. They weren't at specific prices. So a market order basically means I want to buy a share or sell a share at any price. It means just make the deal happen. I don't care what the price is. It just needs to happen. So market orders stack up before the market opens. And then as soon as the trading day actually opens and that huge rush of volume comes in, it drives price up so quickly that it gaps up. And that's what happened right there. And when that kind of thing happens, it tells you that a bunch of shares changed hands. There are a bunch of new people invested in the company. And if you look at what happened after that point, it was just, I mean, even though it was volatile, it was up. And I mean, what did they, so it jumped up from 140 to about 260. So I mean, you made a good $120 on your per share on Target if you were buying in this stuff right here. If you had it before that, then you're really happy about it. But this is a strong volume area. Look at this candle down here, this volume candle. It's, let's see, what are we at? About 40 million shares that day. That's one of the higher volume trading days. So that tells you right there, a big gap, huge volume spike. That tells you there's a lot of support right there. There are a lot of buyers that were interested at this price. And that's why when it fell down, it's falling down to this strong support where people that got in are questioning, should I keep this? Should I dump it? So what we could be getting here is a nice crack. Then what's great about that is we have this pressure from the economy, right? And we also have scared investors, scared longs that have spent a year in, actually almost 2 years in full profit, are now about to lose everything that they bought in for. So they're thinking about dumping. There's a lot of pressure to the downside on the stock in itself. And you add the market pressure on top of it. That, I love a huge crack on this stock, because if it cracks and goes way down, let's see where it could possibly go. We've got a lot of support down in the under 100 area, because there's another gap here at about 85, and it gapped up to 100. So I mean, if it cracks this little spot right here, we're looking at like 120 to 100 kind of being the area that it goes to. I don't necessarily think it'll go down below here, but if it does, that's wonderful. I would love to get Target in the double digits. I'd be buying so much of it if it came down this low, but I don't know if it's going to, because it's already been destroyed so far. And even if we have some pain, I can see it just kind of pushing through this a little bit and maybe going down to this, 117, 115 level where there's a little bit of congestion in here, some high volume candles, a couple of gaps. So yeah, I like gaps. I like high volumes on those gaps. And I like that price action stayed in that range too. That tells you that people were okay with this price for a while and it was supporting there. So I'm looking at this, 150, let's call it 115, 120 level. That would be a nice level to start getting some target if it goes that low. I'm extremely happy about that. But that was bullish. So the Fed would look at that and say, okay, if businesses like Target have too much inventory, because it wasn't just Target, other businesses did the same thing, and they had the same kind of problems. Things showed up late. They weren't able to sell all of it. They have all this inventory that now they have to pay to store, right? Because the whole just-in-time shipping network has been disrupted for a while now. So they're taking a hit on this. So they're going to mark it down and sell it. which also tells me that the next quarter could be looking strong for bounces if things look better in the market. So what do we got here? Green week. Don't get short squeezed. This could be a green week. Okay, so that's what I want to get to with that. So you're sure that it's going to be a green week? I'm not so sure. I think it could be a green week. My estimate would be that after the Fed meeting, there's going to be a squeeze because there's so much pressure built up waiting for that Fed meeting. But I don't necessarily know if that squeeze is going to last. See, that's the question. It's going to be kind of volatile going into the meeting. I don't know if we're going to go down, sideways, maybe up a little bit. But once Jerome Powell starts talking on Wednesday, that's when things are going to. That's when we're going to see what happens. If we get what happened last time, we could get a nice little pop, get an opportunity to jump in on that squeeze, and maybe get right back out. Because afterwards, even if it does squeeze, the reality is going to set in. Because then we're going to have to see what the market will do on its own merits. So when a squeeze happens, let's see, am I holding AQN? No, I'm not holding any AQN. Actually, let me look at that real quick. So if a squeeze happens, the weak hands have to get pushed out of the market with that. AQN. The weak hands have to get pushed out of the market with that. So you want to see what happens once all that's cleared. It's like if you throw a rock into the water, right? There's going to be that big wave that goes blue, blue, blue at first, and then it kind of settles. So once the wave has settled, what does the tide look like? And my guess is if they have to hit this harder than 50 basis points, which is the thing we need to be paying attention to, then there's going to be the question isn't whether or not we're going down, but the question will be how much. Now, I am totally open to the fact that we could bounce and it may not be as bad as we think because there's a lot of bearish stuff going around the media and that affects your mind. Sometimes you think about that and that gets to you a little more than you want to admit. So it's very possible that it could bounce and things could be better than we think. But my thought is pulling up this chart again. I don't know if you saw the chart earlier, how long you've been watching. This is what we're looking at as far as the guesses for interest rates. Okay, so this was 50. This was basically a guaranteed 50. It's been like that for a few weeks now. But this week, because the pressure's gone up, it could be over 50. And that's the thing that I've been saying for weeks now is if we get more than a 50-point basis hike, then that's going to be huge pressure for the market. After if a squeeze happens, when it's done, it's going to push things down even more. Now, that's only if that happens. If they come back and they stick with their plan and they say, "Hey, we're still doing 50." It's 50, 50, and then we'll see in September, just like we've been saying for a while, then I think that will cause the market to go up. And I think that could make it a really green week. But we'll have to see what happens. So that's the Fed, right? We're waiting for the Fed. Anybody that thinks they know exactly what's going to happen is in for a surprise, man, because this is going to be an interesting week. This is one of the most important weeks we've had in a long time. I'm actually extremely excited about this. I can't wait to see what happens with the market. I'm going to be streaming this Fed meeting live. It's usually I'm on West Coast time. About 11 to 11:30 is when they start those things. Usually Jerome Powell's talking at about 11:30, and that's when the action happens. I might be day trading. I don't know. It depends upon what the environment is. But if I am, I'm going to show you my day trades and we'll go for there. But really, this is the important thing. We got to see what they say. Everything boils down to that. So green week, possibly. I don't know. So what do we got here? And anyone who says they know what's going on in the future is lying. 100%. All right. Nobody knows. That's what I really don't like about a lot of these videos and streamers. People come out and they say definitive things like this is going to happen. Every week it's, oh, the stock market's going to go crazy. The stock market's going to do this. Like it might, but you don't know. And what's funny about those is most of the time when I see those videos, those claims are wrong. I would say like 80% of the time, those claims are wrong. That's why I think it's funny that these people keep doing it because it's like if they keep doing it, eventually they're going to get it right and somebody will go, oh, remember that time you got it right? Like Peter Schiff, right? He loves to talk about how the market's going to collapse all the time. I mean, a lot of the stuff he says is true. He has a point with a lot of the things he says, but he's over the top bearish on everything. And he said, oh, I predicted the 2007 financial crisis. And when I first started, I thought, oh, that's cool. This guy actually predicted it. But then I looked back and I saw he was saying it for years. He says it all the time. And eventually he's right. Right, because the market does pull back at times, and when everyone is going to beat the worst crash. It's going to make 2008 look like nothing. It's going to make the Great Depression look like nothing. They say that every time, and it never happens. Right, it's never that bad. Implied volatility is always overstated. That's a saying in options trading that reigns true across the market. There's always more fear of what's going to happen than what actually happens. Right, so is it going to go? I don't know. My gut feeling says that we're going to get we're going to get a squeeze, so a quick jump and then a drop. But I don't know how long that squeeze is going to last. Is it going to last the day? Is it going to last the rest of the week? Is it going to last a couple weeks? I have no idea. My gut feeling is that it's a day, maybe the rest of the week at the most, and then we get another drop. But last time the Fed meeting came out, we squeezed, and the next day it was down. So I'm skeptical as far as it holding itself, and I'm not going to be in too many things just because I don't want to get caught. Like I'm gonna have, if we have a green week, I'm gonna put on some shorts. That's kind of what I did the last 2 weeks. I just shorted some stuff, and when we had green days, and then I took my profits on the red days, and it's been working so well. I'm not making a ton of money doing that. I mean, these are like little gains here and there, but if that's all you can get, it's better to just stay on the sidelines and wait for something you really understand and you really have conviction in than to just start trying to trade things and trying to make money, because that FOMO kills you so bad. Okay, so let's move on a little bit on here. So we talked about the Fed meeting coming up the 14th and the 15th, Tuesday, Wednesday. I'll hopefully be streaming that live. We talked about the Target inventory situation, so that's a little bullish, which is good, but everything else is bearish, right? So we talked, yeah, shipping, bearish. Autos and inflation, bearish. CPI, bearish. Now we've got slowing hiring across the board in so many different fields. What do we have here? I refer to this as Band-Aid syndrome. Yeah, there you go, Band-Aid syndrome. It's only a Band-Aid. Yeah, you got to rip that thing off though, and usually it's kind of painful. But once you rip it off, it's not so bad. So yeah, bearish. Everything's bearish. The hiring is slowing across the board. So many different companies are either firing people or stopping or slowing their hiring. A lot of that's happening in the crypto space too. The crypto space is getting annihilated right now. I'm surprised that it's still not dropping. It's the fact that it's held the high, Bitcoin has held the high 20,000s is interesting to me. And we're going to get to crypto in a bit, but I want to finish the macro stuff. So the other thing that's bearish now, here's a really important point. The ECB, which is the European Central Bank, they're planning their first rate hike in a decade. So the U.S. has hiked rates a couple of different times. I think more than that, actually. We started in like 2014, 2015, and we're hiking steadily until 2018. And then it was, dropping rates until now. So we've been through two hiking periods in the time that the ECB has done nothing. So they're actually thinking about bumping it up 25 basis points. So there is yet another thing to add to the column of the bears. And this is why I'm telling you things shifted this week. This is why this was such an important week, because like all of this data is really strong data. These are the kinds of things, like I'm a fundamental guy more than TA. Like I like technical analysis in its most basic form, on as just like a little sugar on top of the treat, right? Like I'm not trying to dump the entire can of sugar in my cereal or whatever. I just want to sprinkle a little on top to add that sweetness to it so it doesn't overpower and I can get the flavor of everything. So that's what I do with technical analysis. Just use enough to kind of sweeten the pot there a little bit. But the fundamental stuff, that's the stuff you really want to pay attention to. And that's the thing I don't see enough of on Twitch and on YouTube. I see all these technical analysis people ignoring everything and just going by the charts. Yeah, you can make money but like that if you have that kind of a mind. Well, I don't. That shit does not work for me. I've tried it. I did nothing but lose money when I was trying to day trade and use the chart. So I needed something like fundamentals to add to technical analysis to make sure that I had some conviction in what I was doing. Because when you're just guessing, you get to a point, if you lose a bunch, that you're not certain of anything. Honestly, it affects everything outside of your trading. You start questioning every part of your life. You think, do I actually know this? Or, am I failing at this too, just like I am at the stock? Like it messes with your head. So if you have something that can give you a little bit more conviction and make you sleep a little better at night, it works wonders for your trading and your investing. And I mean, people talk about how important psychology is, and it really is important, but the way you put your psychology at ease is to have some real world facts behind what you're doing. And that's what I like about fundamentals. And that's why I like TA, because technical analysis does actually have some merit. I mean, there's a reason that it's persisted for a long, long time. I mean, people have been looking at charts, trying to figure things out since trading, stock investing began. So anyway, we have all the slowing stuff. The last thing I wanted to get to on the macro side before we move on to stocks and crypto was anything having to do with China, right? So we've had some we had some volatility with Chinese stocks this week. If you look at Alibaba, in fact, let me pull it up. It was an interesting week for Alibaba. I'm using Alibaba as kind of a proxy for the Chinese market because it's a good stock, and it's one of the most popular, if not the most popular Chinese stock. So it's a good one to use as a proxy for the market. I mean, you could use an ETF like EEM. if you wanted to get China plus some other stuff, because EEM is weighted like mostly in China. If you want emerging markets, you're going to get mostly China and a little bit of everything else. But I like Alibaba because it's a little more pure. It's like a pure Chinese play, and it's a good stock. This is one I really really want to get. So it popped up. You can see because there were some hopes that things might be easing. There were rumors going around that the Ant Group IPO was back on, which would have been extremely bullish. So the Jack Ma, the owner of Alibaba, has an investment firm, Ant Group, that he was trying to take public on the Chinese stock exchange, but the government put a hold on it because they didn't like what he was doing. They wanted to make sure that he's going to play ball, and he doesn't really want to play ball fully. Like a lot of we think about these businesses that are kind of akin that have to basically play by the rules that the Chinese government sets up for them, but not all of them want to. Like because some of that stuff will hurt their profitability, and some of that stuff is it's also there's a thing with privacy and all kinds of stuff. So it's a whole other issue that I don't have time to get into right now. But it's not every company is doing it exactly the way the government wants them to. So there's pressure on these companies right now, and that's why Ant Group isn't gonna get to go. I have to do a little more research into that, but just the rumor of the Ant Group IPO being back on was enough to pop things up. But everybody's saying it's not. Jack Ma says it's not. The Chinese government says it's not. So there's no Ant Group yet. If that does come, that's going to be extremely bullish for Chinese stocks. But right now, it's nothing. So the other thing they were saying is China. The good thing that did happen was China is now allowing some video games. So China had a tech freeze going on right now. Basically the entire world is having a problem with social media and content. Right? Think about the battle with Twitter. Like the whole thing with Elon Musk is coming about because we've hit this point where everybody's using social media. Everybody's playing games and using these programs that any information can just be thrown out onto, right? And some of that stuff is fine, but some of that stuff could be really inappropriate for certain people. So some people want complete open, no censorship. Some people want extreme censorship. So the world is kind of figuring out how to deal with all this stuff. And China's solution has basically been to freeze this stuff and say, okay, we don't want some of this content, and we need to figure out a way to regulate it and keep it, out of certain people's faces. Like they want to make sure children are getting educational content and they're not getting like crazy propaganda, etc. I mean, it's a whole mess. So China's response was to freeze everything and only allow little bits here and there as they try to get things going again. So the fact that they allowed some games to be published, and it's funny, not from the giant game companies either. These are mostly like small companies that are getting their games okayed, but it still is bullish a little bit. So that was some positive news that came out there. So not everything was unfrozen, but a little bit, a little bit. So that's something. And yeah, that's what they're saying. Games are inappropriate. They're addicting. It's a world problem right now, and this is just their kind of response to it. And we're going to see more of that. I mean, other countries are kind of going through the same thing. The U.S. is going through it. I mean, the world is changing, and however we deal with it in the future is up for grabs right now. So we have to see, what these different countries are going to do about it. What's the U.S. going to do about it? What's China going to do about it? As soon, that's what this unfreeze hinges on. They have to figure out what they want to do before a lot of these companies are going to be unfrozen and allowed to, do what they need to do again. So that's one of the main things that's weighing Chinese stocks down, and that little temporary unfreeze right there also helped the pop in the Chinese stocks. The last thing that happened was let's see, DD Global investigation is still going on. Their delisting was supposed to already have happened, but you can still kind of see the stock. So I'm not sure what's up with that. Apparently, they violated China's data privacy, and their national security rules. And this was a while ago, so this is old news. But some of this stuff might be winding down, and that's what we're watching. So I was actually not really aware of a lot of this. I don't follow Chinese stocks that often because Alibaba and Baidu, the stocks that I like the most, were sky high for so long that I thought, well, I don't even need to look at them because they're too expensive for me. Now they're in a range where I like them again. And the lower they go, the better they get. So I'm really hoping Alibaba gets crushed. Like I need China to just crush their economy a little bit longer to get Alibaba back down into the double digits, hopefully down there close to like 70, where I got it last time. That would be amazing, but I don't necessarily know if that's going to happen here. So what do we have up here? China's saying they don't want propaganda is one of the funniest things that, yeah, I know, right? Like, It's you're talking about like a state that a country that does nothing but put out propaganda is going like, ah, we don't like propaganda. Well, yeah, well that's what it is. Everybody wants their own propaganda and nobody else's. That's every country's going through the same thing. Like the U.S. does that kind of thing. You know, the Western world, the Eastern world. You pick a country, third world countries, they all want their own propaganda to circulate and they want to block everyone else's. You know, China is just way more efficient at doing that than a lot of other places, the fact that we have this kind of divide right now between Chinese entities and American and the rest of the world's entities just shows you like how big that lockdown is. Let's see, did they not want to give money to the CCP or data? Yeah, that's the other thing too. Their new digital yuan isn't just a currency; it's also a social credit vehicle. So they can say, oh, you know, we don't like what you're doing, or we do like what you're doing, and we add or subtract social credit points with that, which allows you to use your money. You know, effectively they could block you from buying anything they wanted to. You know, if everybody adopts this currency, which is kind of a scary thing. You know, like these currencies, I think, are very important to the advancement of humanity, and I think they will solve a lot of problems that we have. But there's just so much potential for abuse, and I'm not sure we're going to get by that abuse without terrible things happening in the process. So we'll have to see how this all plays out. You know, it's an interesting world right now. Though everything is changing so much that I mean, it brings for great volatility in the market, but kind of scary and interesting times in our lives too. So that's mostly everything with the macro stuff. Basically, what it looks like is we have all these bullish points. We have all these points on the side of the bears. I'm sorry, not bullish. So we have all these bearish points coming up this week, and really the only bullish point was the target inventories and having to lower that. But everything else is going to cause the Fed to think, hey, we need to jack things up faster. We're in a little state of quantitative tightening versus quantitative easing, which is what the Fed calls what they're doing, right? So it's quantitative easing is and tightening is basically adjusting interest rates, what they do, also what they do with their bonds, their balance sheet, it just how accommodative they're being towards the market. Are they turning the money spigot up or down? And for the past couple of years, they've had the spigot on full blast. I mean, money's just been flying out of the pipe, and everybody's been able to get it. Now they're tightening it up. They need to pull some of that cash out of the market, and that's what the quantitative tightening does. They're going to let like some of their balance sheet roll off. They're going to stop buying so much stuff. They're going to make these prices go down, and they're going to just hopefully destroy some of that money and drop the inflation value because it's actually really interesting. So here's so people think that the Fed just goes and prints money and throws it into the economy. That's actually not the way it works. It's a little bit more complicated than that. The Fed makes Federal Reserve depository receipts, and they trade those um, to the primary dealers, which are basically large investment banks, and they trade those for securities, so or treasuries. So the large banks have a balance sheet full of things like treasuries, and if they offload some of those treasuries to the Federal Reserve in exchange for these reserve notes, then they have some space on their balance sheet to hopefully take on riskier assets, i.e., loans. Because loans are riskier than treasuries. Like the US government is going to pay you back, right? No matter what happens, they're the ones that decide whether or not, we're going to add cash to the economy. Like the Fed regulates it, but the Treasury is the one that says, hey, start doing this. So the Fed trades these reserves to large banks. Large banks give them treasuries in order to free up their balance sheet, and then they can have cash to lend to people. And if you've ever heard, money is fake because banks make it out of thin air, that's where the printing happens. It's not done at the Fed. The Fed isn't in the computer adding ones and zeros or like doing anything like that. The banks are just loaning, and that money is being created by those loans. So that's actually a really efficient way of doing it. So but here's the problem with that model. The point of buying those securities is to give the banks some space to loan and to feel secure, right? Because there's two parts of liquidity, and liquidity is the ability to get in and out of a trade, right? When you have a really liquid market like we've had, with these low interest rates, it's really easy to get in and out of stuff. Inflation goes wild. Um, but there's a second part of liquidity that I think a lot of people don't understand. Liquidity doesn't just mean getting in and out of trades. There's also an aspect to it of desire, right? People have to want to get in and out of trades. People have to want to exchange assets for other assets. And even if you can and it's easy, there's still that mental block in there if people don't feel good about it. So quantitative easing and tightening are also supposed to kind of work on the psyche, not necessarily just in the physical realm. So what they're hoping is they can get these banks to loan and feel secure enough. So take their treasuries, give them a little room to work, and hopefully make them feel secure enough to actually loan out. But in the past year, what's happened after the PPP loans, the guaranteed government loans finished out, lending dropped way down because banks were thinking, well, these loans aren't guaranteed anymore, so I don't know if I want to take that risk. If they can, they're going to try to stimulate the market in both the physical sense and the mental sense. That's why it also is important to hear what Jerome Powell has to say, because if he comes out and messes with our psyche, then that could change the way the market goes. So that's kind of what we're looking at. We're basically looking at liquidity. Are they upping the liquidity or are they dropping the liquidity? And right now they're dropping it. So the question is how much? Okay, so let's move on to stocks. We've covered the markets. A very important week. We have to take all that into account, but now we've got some individual plays. So I had some interesting individual plays. The first thing I wanted to talk about, actually, because this gets into some other points as well, was Robinhood. Oh, wait, Hood, H-O-D. They've been around for about a year and a half, well, not quite 2 years, but they're getting there, and they've basically gone down the whole time, right? Because Robinhood had a nice business model initially. They were selling their clients' order flow data to specific institutions for a profit. That's why they were able to make Robinhood free, because trading involved commissions for as long as you can remember. And commissions used to be really, really bad. If you go back like 20, 30 years, I mean, stock commissions were insane. They'd be like hundreds of dollars to make a trade sometimes. And the price came down as competition came in. And especially in the 90s when home stock trading became a thing and more people could do it, there was a demand for lower trading fees because not everybody has, millions of dollars they're trading. Like if you have millions of dollars and you have to pay a couple of $100 for a trade, no big deal. I mean, you don't even see that. But if you're, using a couple thousand for a trade, or your profit margin will be a few hundred, then that hundred or $200 commission fee is going to cut your profits. So they were dropping rates and dropping rates and dropping rates. And by the time I got into trading, a round trip would be about $14. So no matter what, you had to make at least $14 on a trade in order to break even, which is not bad, but it's still, if you make a lot of trades, that adds up a lot quicker than you think. Like there was one month I had like $500 in trading fees on this small account when I first started. It was an account of like a couple $1,000. So taking $500 out for trading fees, I mean, that killed me. I made nothing. And that was when I was trading penny stocks and didn't know what I was doing. So I wasn't making much anyway. So that those trading fees were hurting me. So then Robinhood comes along and they say, okay, I'm going to go ahead and sell the order flow to this other company so that they can make a profit on fulfilling your trades, and then I make a profit because they're paying me to send it to them. And then the person who's trading still gets their shares at about the same price they would have anyway. So it works for pretty much everyone. But the problem is that that process isn't very transparent. We really don't know how much is being skimmed off the top of each trade. And what the SEC is doing this week, they were talking about new rules for this kind of a setup. So right now, Robinhood and other brokers like it are basically just getting up with their buddies saying, all right, I've got the orders, what do you want? They're selling it to maybe one or two organizations, and it's kind of a contract that just continues, right? But Gensler, the SEC chair, wants to change the rules to what is it? Competitive auctions. So instead of sending it to one person, you would send it to an auction, and people would bid, or different organizations would bid for the right to fulfill your trade. So hopefully that would bring competition in and drive prices down. Will it work in practice? I have no idea. I have a feeling that people will find ways to get around it. So that brings up another point, though, that made me think: broker safety. So Robinhood, the reason I'm talking about Robinhood right now is that's how they make their money, right? Other brokers have so many different ways of making money. They give loans, they do different retirement accounts, they have management fees if you want somebody to manage their money for you. There's all these different ways, but Robinhood doesn't really do a lot of that, and they're trying to branch out into that. But right now, their money comes primarily for payment for order flow. So if Gensler does go through with this and they enact these competitive auctions for order flow, then Robinhood isn't going to have an edge anymore. So they're going to have to find some way to make money, which tells me that they would probably add fees right? They're either going to add fees or they're maybe advertising or something. They'd have to find something to cover that, which is why the stock has gone down so much. Like, look at where it is right now. I mean, even just in the past few days since this happened, it's gone lower. So Robinhood would hit around $10 and it would kind of float there. That was kind of its spot that once it broke down to around there, it would just bounce up from like 10 again, 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 again. But since this news broke, since Gensler came out saying that they want the competitive order flow, it's been dropping every single day. So, and I lucked out because when there was a pop up to like, was this it? Yeah, it was 16 a couple of months ago, and I unloaded a good chunk of shares when that happened, and then I rode the rest down. We had another pop up to like 12-ish, 11, somewhere around there. I think it must have been this day. When that happened, I unloaded almost all the rest of my shares. I kept a little bit. I would say I probably have like a quarter or a third of my total shares, but my average is nowhere near this. It's quite a bit higher. It's like uh, 12, 13, 14, something like that. So the shares I have left are down quite a bit, and I kind of wish I'd gotten rid of all of them. But just in case this doesn't go through, Robinhood could squeeze. Like if they decide not to enact those rules or they enact something that's favorable to Robinhood's business model, Robinhood could squeeze like crazy because people are extremely bearish. I mean, look at the chart. This has been a short seller's dream. If you were shorting Robinhood, you've been making money the whole time. Every pop was a chance to make money shorting. The longs, like me, were getting destroyed. I got lucky with this jump right here and made my money back, so I'm pretty much even on this, maybe even up a little bit. But a lot of people aren't. So this is extremely bearish stock, and if things end up turning around, I like it for a bounce. So I've made this list over here, the Sunday Night Finance list. I'm going to kind of keep it going, so every week I keep the stocks in it that I'm looking at, either for the week or for the future. And Robinhood is for that. If it bounces, it's a good bounce if these rule changes don't happen. But if they do, it could be even more bearish. So I'm just watching it and seeing what happens with the market. I might make a decision based on that. Like I really would like to be continue to be bullish on it because I think Robinhood is good at adding new features and trying things out. Like they've been ever since they started, they've been adding little things here and there. I don't think all of them are necessarily that profitable, but their heads in the right place as far as what they can do to make their stock go up. So I like them as a long. Because I do use Robinhood, but I also know there are so many problems. And if this goes down, they're going to have to change their business model, and that's not going to be good for the stock. So it could just end up becoming a penny stock that's worthless, which is why I didn't want to have too much. So the market going down and them going down were both reasons for me to unload as much as I did, and I'm so glad I got to unload them at decent prices. So yeah, Robinhood is what I'm watching for that, and that brings up the point broker safety. So I've talked about diversification. A lot of people do, but most people are talking about diversification of stocks within your portfolio. I like to take diversification to an extreme level and move it to everything, right? So diversification of brokers, diversification of strategies, and diversification of securities. So my idea is, and like I'm not, like I said, I'm not a financial professional. I don't give financial advice. You have to make up your own decisions. But my opinion is that it's good to have multiple things going on. I would say for the average person, the best thing to do, and this is kind of in line with what a lot of money managers say, take most of your money and put it in some kind of a managed index fund, right? And when I say index fund, I'm referring to any fund that has a diverse array of securities that kind of follow the general market, right? Like if you get mutual funds, ETFs, whatever, I'm grouping them all in the same thing. Just to me, an index fund is something that's managed by someone else, is diversified, and it's got a bunch of people with degrees figuring out what to do on it day to day. And that's what you want. People that are smarter than you managing that money. Now, there's the argument that most fund managers don't even make the returns of the S&P. I think it was like of like 3,000 firms, only about 20 or 30 of them actually beat the S&P. The rest of them were below it. I mean, very few. So those people that beat it, some of them might have even just matched it. So all these moves they make don't always end up making you the most money. However, they are in the trenches making the moves that you don't have time or knowledge to do. So even if it's not that profitable, I would rather have a good chunk of my money sitting with people that know what they're doing so they can make the moves for me. Now, I think it's also good to have a little bit of money in your own personal account if you're interested in actually trading or investing, which anybody listening to this right now is. Everybody that is listening has some kind of some skin in the game, and I think that's good. More people should, because even if you're letting other people manage your money, you still want to know what they're doing with your money. So what I would like to do is have a nice index fund that's managed by other people, and I want them to report to me and tell me, hey, we're doing this. This is our strategy. This is what we think we're going to do in the future. This is our vision. I want to know all of that because if I like what they're doing, then I'll say, hey, you do it. You know what you're doing. We're on the same page. Great. But if I don't like what they're doing, then I can find somebody else. So even if you don't want to be involved, you should at least know what the people managing your money are doing. And that's why I think broker diversification is a good thing. So I have three different brokers, right? I have my long account and I have my two trading accounts, and they're all different brokers. And I want to make sure that I have the diversity of brokers because any entity could go down. If you think about the 2008 financial crisis, Lehman Brothers and Bear Stearns were extremely old companies. They were like 100-year-old financial companies that died during that time, right? And these were companies that went on TV the days leading up to their bankruptcy, telling other investors that everything's fine. They were like, "Oh, we got quarter, reporting coming up tomorrow. Everything's fine. We're looking good, even though the market doesn't look that great." And the next day they were gone. Thousands of people were laid off. Tons of money just evaporated out of thin air. I mean, some of that was saved by insurance and all that, but like, not everybody got their money back. Some people got destroyed, and that's what people don't understand. Your money is never safe with any one specific entity. There are entities that are better than other entities and more secure than other entities, but the truth is, you never know because those entities could be hiding their debt. That's what companies like Enron did. See, Enron, they made shell companies that they would sell their debt to or hand their debt off to, so that when they reported their balance sheets, their cash flow statements, everything looked good. They're saying, "Oh, look, we don't have all this debt. It's actually really nice. These other companies do. They're done, but they're just kind of struggling. But we're doing really good. Look at all this." That's how they were able to get away with things for so long. But eventually, that stuff comes back to bite you. I mean, people are smart. They figure things out. And, if you're trying to get around things, uh, you have to do so much work that eventually you're going to slip up or something. So the way I look at it is any broker, no matter how good it is, could have those problems. So I want to have a diversity of brokers just in case. And Robinhood is the perfect case for that. So is Robinhood to me is just a trading account. I have a couple of long positions on there too, but it's mostly my trading account. So if things blow up on Robinhood, I'm not that concerned because most of my money is not on Robinhood. Most of my money is on a much more secure broker, at least in my opinion. So I think diversity of brokers is important, diversity of securities is important, and diversity of strategies. That's why I like having most of your money with a money manager and then having a little percentage of it for yourself. So what do we have here? From what I recall, Robinhood doesn't even have FDIC insurance. You're right, it doesn't. It has SIPC, which only covers up to like $250,000. Which for a lot of people isn't a problem because Robinhood does cater to uh, all types, and there are so many people with just a few hundred or a few $1,000s that use Robinhood. And they'd basically be secure, hopefully, at least as long as the SIPC comes through. But they don't have FDIC insurance, so the amount that they're protecting isn't going to cover everybody. So there are people with million, 2 million, 10 million, $100 million accounts with Robinhood. They may lose most of that. I mean, hopefully those people would have other ways of hedging themselves. But with small brokers like that, that's what you're going to run into. Especially, what's even worse is if you have offshore brokers that don't have to play by the U.S. rules, they're going to have even more problems if things go down. Like there are times where people make a bunch of money in these offshore accounts and they can't move it because tax rules or local whatever or local rules prevent them from actually doing that. So you have to be careful and know what you're getting into. And with Robinhood, at first I didn't know what I was getting into. The first thing I did when I started trading was sign up for a Robinhood, put in like $1,500, and then just start messing around. And that's I think a lot. It's what a lot of people do. At the time, I was talking to other people online that were saying, "Yeah, I was doing the same thing. I was just throwing, I threw a couple bucks in and just messing around with it." I met a guy one time that said he threw like a couple of thousand into account and he tripled it or doubled it, right away and just picking random stuff. So. A lot of people that use Robinhood don't really know what they're in for, but I do now, and I'm okay with their instability because if things end up being okay, then I'm still good. And the worst comes to worst, I don't think they're going to close down. You know what I mean? Like I mean, obviously, worst comes to worst, they could they could go bankrupt and then you have a problem. But I think more likely, if this rule gets passed and they have to, have competition for their order flow, they're just going to find other ways to make money. So, yeah. So that was the point. Broker security. Make sure if you're diversifying, if you're really thinking about your investments from more than just a trading standpoint, you have plans for all contingencies, right? Like what happens if if my investing strategy for my personal money doesn't go well. Well, that's okay because I have the money managers managing that. Well, what if that money doesn't do well? Oh, well, hopefully I've been able to offset that with my trading, right? And if something happens with one of my accounts, okay, I have another account. So I'm as diversified as I can be. And obviously you can't take that to too many extremes. Like I know and I did this too when I first started trading and getting into like diversity of securities. You can have way too much sometimes. Like you can invest in too many stocks and you're not going to make anything because you only have a few bucks in each stock. Oh, I have like 10 shares of this, $5 stock and I've got 20 shares of this $3 stock and I got a few shares of Tesla and Apple too. And like you got all this stuff everywhere. It's going to go up a little bit, but you're not going to make that much. You're better off putting a good chunk of money in something you actually believe in. That's the best way to actually make money. So that you really have to do some research. You have to be as sure as you can be for yourself. Don't take any trade advice from anybody else. I have never taken a trade that somebody else has said and had it work. Not once. And I've done it like probably 10 times. I'd say like 10 different trades. I got them off of different YouTube videos, friends, people I was talking to that claimed to be experts. I was a member of a stock group for a while. One of these, gurus was recommending a trade. In fact, that was my first big loss. Was this penny stock that this guru recommended. He sent out an alert that he was in it, and I was like, all right, I'm going to jump in, and I lost hundreds of dollars right away. And this was when I only had like $1,500 in my account, right? So that hurt at the time. I was not expecting that. I'd never seen that kind of a loss before. But that told me right there, you'll be careful with these. And I tried them again later. I didn't put quite as much money into these ones that I tried at different times, but they all failed, every single one of them. So that's why I say like make sure you make your own trades, that you think of the things yourself. And if you get an idea from somebody, research it on your own because it's not necessarily a bad idea if somebody else comes up with it, because there's going to be a lot of obvious trades, like things that people will get in, but you have to do it in your own way and be comfortable with what you're doing at that time. So that's why I say if you're going to be diversified, take it to reasonable extremes. Check your brokers, check your strategies, and check your securities. Okay, so moving on. We talked about Robinhood. We talked about Target. They're looking good. So the other thing that was interesting this week is we had a nice little pop in uranium stocks. Now, I don't usually mess with uranium stocks. In fact, I didn't even know what too many of them were. I had to look a bunch of them up. But we had some news come through the week that the White House said that it wanted to spend 4.3 billion to buy uranium domestically. Now, this is a lesson in paying attention to detail in the news. So when something like this happens, the algos are going to push up all the stocks in the space, right? That's kind of the way algos work. They overreact quickly because they all fight with each other and cause things to be way more inflamed than they normally would be. And this popped everything, right? The entire uranium space, every stock you can think of, from penny stocks to the good ones, all were popping. Now, listen to this sentence, right? US seeks 4.3 billion to buy uranium domestically. So that tells me that they want to buy uranium from US producers. So you have to look at the stocks and say, okay, which ones are the US producers and which ones are in other countries? Because that 4.3 billion is going to US stocks, at least in theory, and not to the other ones. Which when the fury and the squeezes are over, things are going to settle to what they, should be. Another country's uranium stock is not going to get the money. But what are the US ones? Okay, so we have URG, UEC, and then quadruple U, right? Those are all American stocks. And there are more than those, but those were the ones that I was looking at. So let's look at UEC, which I believe is the bigger one. Let's see, UEC. Yeah, Uranium Energy Corp, right? You can see the pop. Is this on daily? Yeah. So you can see that they popped when this happened, right? The news, this must have been, yeah, the 7th. So this would have been like Tuesday. This is when the news came out, everything popped, and of course everything else in the market brought it right back down. And I knew this was going to happen to some of the other stocks. So I was looking at, let's see, what was it? I can't remember the one, but there was one, a Canadian stock that was looking like a good short. I didn't end up jumping on it, but my thought was, because I wanted to be out in cash right now. But my thought was that would be a good short. If when you have a nice pop and the news hasn't been looked over in detail. They're just kind of going over the broad points. Money, uranium, up. That's the algos right now. Money come in, uranium go up, buy uranium stock. So those shorts, when those algos realize, or the people running those algos realize, oh, this is only for U.S. companies, this isn't going to affect other countries as much, then they're going to pull out their investments on those ones. And all of them went down because this is a U.S. company and it went down with everything. But it would have more security in the future because it is a domestic producer. So that was one thing I wanted to make a note of. Like, make sure when you look at these frenzies, when something pops like really high or cracks and falls down really hard, look at the news in detail and see if there are any little things that separate stocks from the other. Like that one thing domestically, that word separated the U.S. stocks from every other stock. So that was an important thing I wanted to bring up this week. Next, we already talked about Alibaba. Okay, the last couple of things. Apple, right? So Apple started a buy now, pay later program, and they're offloading that to a subsidiary that's going to actually handle the credit, but they're financing it with their own cash. Now, that's extremely bullish for Apple because if you think about that, people are going to be owing them money. And when people owe money, when there's a large, there are a large amount of loans coming out, there are going to be people that pay it slowly and accrue more interest, right? So that's very profitable for Apple. So Apple's a stock I love. I mean, the more it drops with the entire market, the better. See, Apple is the best stock in the market. It is the premium one. I think it's the largest by market cap. It's also constantly delivering ways to make more money. Like the Apple knows what they're doing. You can talk whatever kind of crap you want about Apple and their products. I mean, they are overpriced, yes, but they are good products too. A lot of the stuff is the same stuff that's in other electronics. But overall, as someone that has owned Apples and had Apple certifications and seen what Apple can do in business and personally, they are a good company. They are good products. You can have your own opinion, say whatever you want. I totally get it. I understand they're very hipster. I understand they're way overpriced, but they are worth being slightly overpriced because you put an Apple product in, it's just going to work. I went into businesses that had Apple products from the early 90s and the late 80s that were still going strong, and they had no plans to remove them. And these were all original hardware machines too. So I mean, Apple does make good stuff. So it's something that you can generally assume that Apple's going to make good products and they're going to find a way to be extremely profitable while they do it. So if it drops on market weight, if the market weight it pushes it down, it's a great product. It's a great stock to jump into. Let's see. I have a fundamental issue with how they do business from a programming standpoint. Yeah, okay. There are so many criticisms with that. I totally understand, right? But from a basic user's perspective, not from a developer, because you're a developer, you know so much more about code than I ever will. But from an overall perspective, somebody that did IT, somebody that used their products, if you didn't know anything about computers and app or any of their products, Apple products are good products to get because they'll work for you and they'll be easy and they'll function for a long time without problems. So they are a good stock. And yes, I'm acknowledging all the other stuff. Yeah, I can hear some of you cringing super hard at that, and I'm used to that. All right, everybody has this in their head. People that don't use the products or have huge opinions, so many opinions on Apple, and it's like you've never even used the product. You don't know what you're talking about. You're just hearing other people saying things and repeating them. They definitely have problems too, but they overall are a good company. Okay, so yeah, moving on. That's bullish on Apple. Good thing to look for. The last couple of things, Tesla. We've got some important split news on Tesla. Now, this is something I've been waiting for a while. I got into Tesla, when they had that nice drop, and then I sold it when it bounced and made a nice little chunk on that. But they're slowly trending down. So yeah, I bought down here and I sold into this up here. Which was wonderful. That was a great little trade right there over, I mean, a week or something. It wasn't that long. But as it comes back down here, I like it even more because stock splits are popular right now because of things like Wall Street bets. The first Tesla split went insane. I mean, you made so much money if you bought after that split. I almost did. When it went down to like 300 and something dollars, it was like 320, and I remember thinking, I'll see if it goes more. And that day was literally the bottom. So Tesla is something that's difficult to get. If you get a chance to get it before an event like this, it's a great buy. As this thing comes down, I'm going to buy more. Like I'm hoping we have this nice little drop before the Fed meeting. I'm going to make a little starter position in it to see if I can get more if it drops. but I don't know if it will. It all depends upon the market. I do think that the market is going to have some problems. I do think there's going to be some downward movement. I could be wrong, but I'm hoping that downward movement will extend to Tesla and give me a way better buying opportunity. So I'm going to start with a tiny little position, and then I'm going to up it as we drop. And Tesla is one of the main stocks I want to get. Of everything like Alibaba, Tesla, those are two stocks that I want long term. Amazon I already got, and I'm basically back to break even now. I should have taken profits and re-entered, but I didn't want to get rid of both of them because I want Amazon and Tesla and Apple long term. So we're looking at those. Tesla's a great one. They officially filed for that 3-for-1 split, and that official filing, since I think that came in either during the day on Friday or after hours, it may not take effect until next week. So they could have a pop already because of that, which I hope they don't because I'd like to do my starter position. And I'm not going to get my starter position going on a day when it's super green. I just have this thing where I have to buy on down red days, right? Because buying on green days, especially in this environment, usually gets you crushed the very next day or a few days later. I mean, ups don't last very long because we are in a bear market. I think it's an official bear market now. I want to say a bear market in a technical sense uh, is somewhere around 20% down. And that's kind of where we are in a lot of these indices. Like some indices are actually lower than 20%, but I think the S&P, the Nasdaq, I'm pretty sure those are technically in bear markets now. Maybe the S&P isn't quite there, but it's close. Crypto's definitely in a bear market. Crypto's, I mean, it's been slashed 50, 60%. So it's really, I mean, it's bad right now. So yeah, Tesla. Love that stock. The last stock I want to talk about before we get into crypto is DocuSign. So DocuSign had an awful, awful day. Let's get to Docu real quick. DOCU. They reported on looks like Thursday and just crashed. So these numbers were awful. They came in at an EPS of 38 cents when the estimates were 46 cents. So they still made money, but way less. 12 was at 8 cents less a share. For a company like DocuSign, that's a pretty decent miss. Also, their revenue came in 5.8. So the revenue came up a little bit above estimates. Estimates were 581 million. Revenue came in at 588 million. So that tells you right there, they took in more money, but they made less with it. That's why I like to always look at the EPS and the revenue, right? Because EPS is earnings per share. It tells you if you take all the earnings that company made that quarter and divided it by every share, this is how much each investor would be making. So you'd be making 38 cents on your investment per share based on this earnings report. Now, obviously, it's not that exactly because the stock trades by however it's going to trade. I mean, so that 38 cents causes more than 38 cents of damage, right? I mean, people drop this stock from 90 bucks down to 65. That's a huge, huge drop. If you look at it on the long-term charts, let's go back to the big chart on DocuSign here. Nice little gap. Boom, gapped way down to the lows. And it hasn't been this low since like what's it, 21, 20 or 22, 21, 2019. So 2019 was the last time that it was at this level. And the pandemic helped it. If you look at this part of the pandemic, where's February? So they went down just a little bit. They went from like what 90 to 60, and then they exploded all the way up to 300. So DocuSign is a nice profitable document signing and that type of logistical stuff is not going away. That's why I really like the drop. In fact, there's some analyst that was saying they bought some on TV, which is great. I love it when analysts have the same idea as me because that's the thing that pumps stuff up is like analyst recommendations, actual stock analyst upgrading and downgrading stocks. I mean, those have huge impacts on price. And DocuSign got beat up, and it's probably going to get beat up some more. So that's another one I like for the future. I put that one on my list too. Oh, I forgot one thing. So the last piece of stock news before we move on to crypto, our good buddy Facebook used to be FB. You put in FB, you get nothing, right? It's one day. What is this? It is now officially Meta. They have changed their ticker symbol to META. Isn't that adorable? So they've changed their name from Facebook to Meta, and their stock is now also Meta. Oh, that made so much of a difference. Can you believe how much better Facebook is now that they have this new name and new ticker symbol? I mean, they spent who knows how many thousands or millions of dollars trying to make all these changes, and what did it do for them, right? Like, I get it. It's part of their image. They're talking about the future. They're thinking about things long term, and I actually respect that. That's why I think, Meta, I still want to call them Facebook. That's why I think Meta Meta in the long term is a buy. I mean, look at how far down this stock has come. It's worth 175 bucks. It was 384. It was going to get to 400 if things didn't kind of turn around at that point. I mean, this thing was moving up, and in the future, it's going to be worth a lot more. It's kind of at its previous level. So let me switch this to the weekly real quick so we can get a better look. Like if you look at Facebook over time, it's been nothing but up until it hit this area that it's in right now. This was a high volatility area, and that started in 2008 when the market was just going insane. But if you look at it from the pandemic, it was a huge moneymaker because they were selling advertising, more people were inside, their user numbers were growing so much faster. So this huge drop that they had on earnings earlier in the year, plus everything that's happened now, makes them look really good. So they're also in my list. I mean, this list that I have over here has so many good companies like Target and Walmart. I love looking at both of them. Like look at Walmart. They had problems too right before Target. They're still staying down at these lows. And at some point, retail stores are gonna have the business they had before. They're all just losing money. They all have shipping costs and inventory costs that are way too high. Let's see. The idea is that Facebook is their social network. Meta is the programming company conglomerate. Yeah, Facebook is now a part of Meta. Like they started out as Facebook, but it became the company Meta that now owns Facebook and Instagram and the metaverse and Oculus and their whole blanket, which is why I like them because they actually have a lot of stuff. They're really getting into the VR world. So let's see, i.e. Quest and whatever their version of VRC is. Yeah, they have so many different products, and their rebranding is it'll be fine in the future. Nobody's going to care in the future. It's just kind of dumb right now, but it's good to know because people that were trading Facebook are now using a different ticker symbol. It is no longer FB, it is Meta. So I'm looking at Meta. I've got it on the list. That's another buy for me if things really tank. I have so many stocks that I like and I'm looking at, for this. It's almost like I'm not going to be able to get them all, but Facebook is another good one. So now we're going to move on to some crypto news. So anybody that is familiar with the Bored Yacht Ape Club might be interested to know that they were hacked. They lost $360,000 in ETH and 3 NFTs. So they got massacred on that one. I mean, the Bored Ape Yacht Club, I can't even say it. I always want to say Bored Op. But the Bored Ape Yacht Club has been kind of under scrutiny for like the amount of inflation that happened with their products, the amount of people that lost money buying in late. I mean, it was a hype. That's kind of what happens. It was art's foray into crypto. And crypto is going to be bringing in more products as time goes on. And that's just NFTs were the more recent version. Like originally it was cryptocurrencies. That's what brought blockchain to the public as far as the knowledge was its use as a currency. And blockchain can do so much more. And I mean, blockchain isn't even the best name for the technology, but it's the most familiar to most people. So the space is growing, and right now it's getting destroyed, which is wonderful for the buyers, and that's why I've been buying in more. I upped this week. I bought some more crypto. Every few weeks, I've been buying a little bit of crypto. Now, very very tiny amounts, not a lot, but just adding to it on the down trend because this is the time to do it if you like it. So something that was kind of bearish for crypto. Goldman Sachs backed digital bank Starling. The CEO Ann Bowden says that cryptocurrency is a threat to the payment structure because lots of wallets are connected to scams, right? So she was coming out publicly and trying to put some FUD into the space by saying like, oh, it's all a scam. There's so much because there are scams. I mean, cryptocurrency, if it is a little bit more uh, open and free, then scams are just going to be a part of it. It's part of life. You have to find a way to get rid of that stuff or to minimize that stuff. But the more free you make something, the more chances for things like this there are. So I agree with her. I do think that's a huge threat. Like depending upon how bad these scams get, I mean that's what's going to push people's opinions on crypto one way or the other. The more people get burned by these scams, the more people just aren't going to want to adopt it. And that's what crypto needs. Crypto is suffering from a lack of adoption. Like cryptocurrency has gone up so much because traders and speculators are all about it, and investors, they love it. But the average person doesn't want to use it as a currency. It's way too volatile. I mean, I actually had a friend who used some Bitcoin to buy his child a gift like 2 or 3 years ago. And a month after he bought the gift, Bitcoin was worth so much more. He used Bitcoin to buy it, and he thought, man, if I had waited a month, I could have used a quarter of the amount of crypto to buy the same thing. And he was so frustrated, and that's what people are feeling that are spending this money. When something's that volatile, you have those regrets when you spend. Now, sometimes it works the other way. Sometimes you spend it, and then the price drops, and you go, "Ha, I made a good trade there." But most people don't have that. I mean, when things are moving so much, you got to buy what you got to buy at the time. You don't have time to pay attention to the market. So the adoption of crypto is difficult for just that one thing. So let's see what we got here from Brigador LL. I just can't get behind the crypto scene. It's attracted the worst of the worst people, the get rich quick YOLO types who perpetually make bad decisions over the course of their life. Yes, 100%. That is a huge problem in the crypto space. Now, I am going to push back a little bit and say that's not all that. I'm actually bullish on crypto, but I'm the most bearish bull you'll ever meet on crypto. Like, all I talk about is why crypto's going to fail, right? I'm somebody that believes in it in a long term, but I'm always talking about how it's going to fail because there are so many risks. And that's the biggest one right there. Speculators and scams, right? Speculators cause the price to move so much so that people get burned who buy in at the wrong point. And scams are ripping people off and turning people away from the crypto space altogether. So the programmers and the people that use the technology for what it was meant for and things we haven't even discovered yet are really bullish on it, and they like the technology. It's very useful. That technology is here to stay regardless of what happens with currencies. But the currency market is what's bringing that technology to everyone else. So the adoption of it is extremely important for its longevity because people that don't understand it are going to be the ones that fund the research into making it better for the people that actually do understand it. So the people that do like it and do understand it need everyone else to buy into it. So right now that space is difficult. Like when you have a crypto winner. In fact, let's pull up Bitcoin right now. Let's pull up the futures. The Bitcoin futures are sitting at slash BTC. Let's see. Oh, 26,920. It was 27 earlier. So look at this. I mean, when crypto exploded at the end of 2020, you have these huge volatile spikes, right? You kind of have a double top actually, which in trading is a really bad sign. But people that were buying in all this are getting destroyed. This is painful. Like most people after the pandemic, because Bitcoin dropped to like 4K or something at the absolute low on March 23rd. I remember that day too. My account was locked up and I couldn't buy. I was trying to buy so much crypto that day and I couldn't because another trade due to an error caused all my money to get locked up. So that was extremely unfortunate. But people that got in during this whole trend are still profitable. Like people buying 4 to 10K, this whole range right here. What is it? It's saying 18, but really the range, yeah, right around here on like 13, 12K. This is where a lot of the trading happens. So there are so many people, including me, that were buying in right here. I was actually buying in down here at the lows, and then I got rid of a bunch of it in this, so I kind of missed out on a lot of that. But this volatility for all these people that are up so much is hard, and a lot of people are dumping their shares. I mean, look at the volume. The volume is staying relatively consistent as this drops. Oh, let's see what we got here. So Ashton Phoenix, you like the idea of crypto, but you don't think any of the current ones, except maybe Bitcoin, are going to succeed. Yeah, that's kind of up for debate. I mean, there are so many cryptocurrencies that have nothing but an image. They don't actually have a real product behind them, and those are the ones that are going to fail for sure. Like if you look at the thousands of altcoins that have come up since Bitcoin's popularity, and especially during the bull markets, like during this run right here, uh, there were so many new cryptos, new ICOs, initial coin offerings, uh, coming to the market because people are trying to capitalize on it. And anything you bought was going up. But during this time is when you see the real projects, right? So we needed this flush out right here to get rid of those stupid projects. We need a lot of those dumb NFTs because like NFTs played a huge role in this pop and this crash. We need a lot of those to go away and leave the better ones because NFTs have a use. And as dumb as some people think they are, I'm actually bullish on them. I think in the long run, NFTs are a good thing and they're going to become more valuable as the digital economy and the digital world expands. But this drop right here is extremely important because we need to flush those people out. Projects that actually have some utility behind it, for example, Splinterlands. I did an interview with Salmon Fishby, who shout out to you sitting in the chat right there, where we talked about this. I've actually had so much to do. I haven't finished getting it set up and put online, but at some point soon I'm going to have that on there and we talk about a lot of this stuff. We talk about Splinterlands specifically because he plays Splinterlands and he knows a lot about it and it has utility. He's he's been making money playing a game, the type of game that he's been playing his whole life, right? This is a card game. And this isn't the only use for blockchain. This is just one, a way to play a game that you're going to play anyway and make money, real world money on it, like pay to play, right? Normally we've been paying these game like freemium games, right? Like you get involved in a game, they get you hooked for free, and then you have to use real money to buy their in-game currency, and you don't get anything from that. Whatever you buy, you're like, oh, I bought some more lives, I bought some more, units that allowed me to do something. But then you do that thing, and that money just goes away. You just threw all that money in the trash, right? Whereas something like this, you play a game, you compete against other players, you win, you get a little crypto. You can also take your cards and you can loan them out and collect yield on those cards. You can also just make you can also make money trading the cryptocurrency itself because Splinterlands, I'm still kind of getting the hang of this, but they have two different currencies. One that's kind of pegged either I think it's at a U.S. dollar or a Bitcoin or something like that. It's pegged to a specific amount of those things, and then they have their other in-game currency that they use to trade against it. So if one of them drops below the trade rate for the peg currency, you can buy it and make a little money as it comes back up. So there are at least 3 or 4 ways to make money playing that game. And I do we go more in depth in that during the interview, and I'll have some video of the gameplay too if you're interested in seeing it. But it's gonna be a little time before I get that up. But that's the whole point of this. There are some utility there's a use case for cryptocurrency, and the ones that actually have utility are the ones that are going to survive. So during this time, what we've noticed about Splinterlands is it kind of hit a bottom and it moved back up. While other things were going down, it was still sitting there because people were actively using it. It had a use case. So that's what this flush out is giving us an opportunity to look at. We're getting an opportunity to see all these currencies that are actually important, which ones are going to survive, and also which developer teams have the resources to keep it going through a crypto winter. How many miners are going to back the support of these things? Because most of these cryptocurrencies depend upon how many people actually are involved in them and are actively mining them. If miners are going to go wherever the profitability is. So if you have a profitability or if you have a profitable cryptocurrency that has a use case, miners are going to start gravitating towards you more in these times because the stupid ones aren't worth it. Okay, so let's keep going on this here. So yeah, Goldman Sachs, little bank, wasn't too happy about it. They said there's a lot of scams. So Binance is adding high yield stacking to some of their proof of stake coins, like Binance Coin and Solana and stuff like that. They're kind of behind some of the other exchanges, but that's more yield, right? It's another way to collect yield on your investments, and that's the other thing I really like about cryptocurrency. A lot of these you can stake and collect yield on while it's just sitting there. So you're not just having it's a way to fight inflation too. Like I'm so bullish on cryptocurrencies and the possibilities because there's so much you can do with them, and I think they are going to help a lot of people. Like I think some people that are in poverty will be pulled out of poverty by crypto specifically because of the use case scenario. Let's see. So what else we have? All right. So here's a tougher one. New York enacts a bit license. They have rules for stable coins, like more rules for stable coins now. So a lot of these firms, a lot of these mining companies, they were kind of against this because it's going to make it more expensive to mine. So that was kind of a little more bearish, but you're going to see more legislation like this across the board. New York was just kind of one of the first ones because we're having problems with these stable coins. Like the big problem with stable coins is it's the problem that's as old as time. Do you have enough of the asset you say is backing your currency to actually justify the shares you're allocating? Right. So if it's a 1-to-1 peg to like a dollar, do you have enough dollars in your account to support the amount of altcoins you're selling to people? It's supposed to be pegged and supported so people don't get burned. But you never know. I mean, that's how when you can conceal what you have, there's always the temptation to cheat. So some of these coins are cheating and people are getting burned by them. So that's why New York enacted these rules to make things a little bit more stable for people and keep people from getting burned on a lot of these scams that are going around. So the next thing that's coming up is the EU plans to have some crypto legislation ready this month. Now that's big. One of the big fears with cryptocurrency is regulation, right? Regulation is necessary in this market because crypto is extremely open right now. It's very unregulated. There are minor regulations, like now you have to declare them on your taxes and stuff like that. But just a couple of years ago, you didn't have to do that. Cryptocurrency was a way to make money without having to pay taxes if you could launder it properly. It was a way to do that, but they're kind of cracking down on it. They're making it harder for those things to happen. So the EU enacting some legislation on crypto could be bullish, could be bearish. It depends upon what they do. Because there are a lot of people with money. There are entities, like extremely rich entities, that are threatened by cryptocurrency. The entire financial system is threatened by cryptocurrency. And if you think about that, the US government, I should say the Western world, uses the financial structure as a weapon to not have to fight wars, right? To enact your own policies across the board or across the world without having to put boots on the ground to make things happen. So those people that control that want to keep that control in their hands, and cryptocurrency is a threat to that. So you'll see people with a lot of money, like Warren Buffett, Charlie Munger, Bill Gates, all that. I mean, Bill Gates has recently kind of said he likes some cryptocurrency, but he's mostly been bashing it the whole time. Why? Because he's one of the richest people on the planet in the current financial system. He doesn't want that system to go. He wants to have at least enough control over the crypto market to not destroy, to have it not destroy his power. And everyone like him is thinking the same thing. Like it's gotten so popular that these people have to start getting into it, and they're slowly admitting that yes, there's a use case and everything, because it's hard to deny at this point. There's so much potential with this, and there's so many problems with the fiat system that we have, that an alternative is looking more attractive as time goes on. Like, I think so. I mean, the whole reason cryptocurrency came up was because the Fed was ridiculously printing money and devaluing everybody else's currency. Like, people that don't own assets are getting hammered by quantitative easing and all the things that the Fed and the Treasury have done over the past like 14, 15 years. And actually even more than that. Like, as time goes on, more money enters the economy, more money is quote printed, and that devalues every dollar you have. So people living paycheck to paycheck are getting screwed, and that's why cryptocurrency came out, because it was a way to stop that. It's a way to battle against the negative part of the financial system. The rich having all these assets don't mind inflation, because inflation lifts up their assets. And most rich people aren't in cash. They're in assets. Like, you look at Jeff Bezos, you look at Elon Musk, you look at name your person. Most of their value is in stocks, in bonds, and other financial assets that they can exchange for cash if they need to. So when you look up somebody's net worth, I mean, most, like 90% of that's going to be locked up. 95, 99% of it, I don't even know. It depends upon how people have their wealth set up. But they are all depending on this the economy to run right in order for them to keep their power structure. So, or all the stuff that's entering the crypto market, all these regulations are unknown right now. So we're going to see how these regulations in Europe and the ones that eventually come in America even more, because we already had some with with like the infrastructure bill. I think there was some cryptocurrency stuff stacked in with that made it so that if you used a large amount of crypto, you had to report it with you had to like exchange social security numbers. Like, they put in all these crazy rules that people are lobbying to get rid of right now, because they're trying to rein the financial system that's a threat to their own financial system in. So yeah, so the EU planning to do that crypto legislation this month is big. We have to watch that. The other thing, here's something that's extremely bullish. Mastercard, they uh, they open a payment network to NFTs and Web3. So adoption by like Visa, American Express, Mastercard, companies like that is extremely important for the crypto space, because I mean they process most of the payments of the world anyway. So if they can add crypto into their business, then that's extremely bullish for people using the use case of crypto, not just the speculative asset price of crypto. So that's really, really bullish. I like that. Anytime large companies add adoption with cryptocurrency or anything involving cryptocurrency is a big win in the space. So the last thing I have here is Fidelity Investment CEO Abigail Johnson is bullish on crypto. So she came out and said something positive about it, which when you see investment CEOs or investment companies backing crypto, that's another bullish sign. So I'm extremely bullish on crypto in the long run. But the thing with crypto is it's tied to the market. Okay, people want to say it's a hedge, it's all these different things. No, it's not. It's tied to the market. Specifically, it's tied to the Nasdaq, because a lot of companies in the Nasdaq is tech, so they're involved with blockchain and Bitcoin, Ethereum, altcoins, everything. Right. So many of these companies are like Tesla has a bunch of crypto. You think MicroStrategy, Michael Saylor, they have a bunch of crypto. Not to mention people themselves, the individual people in that company probably have their own cryptocurrency. Everything is looking really, really up, but it is heavily tied to the market. So those companies that are invested in cryptocurrency, specifically Bitcoin mostly, are helping drive the price up. And they're buying as this thing drops. And when we have another mania, because it's the stock market always has manias. They come in cycles, like the one in 2021 that we saw. I mean, that was wonderful, but that was the popping of the bubble. That was the end of the mania that had been going on for a couple of years, maybe even more. So when we get an upturn like that and people start coming back into the markets and start wanting to throw more money at these things, it's going to be good to have positions down here. It's going to hurt in the weeks, months, years that the market goes down because you don't know how long it could be. I don't think it's going to be years. My thought is that most of this year is probably going to be downwards and sideways, but towards the end of the year or the beginning of next year is probably when we're going to have a turnaround as these things work themselves out. The shipping problem, the supply chain problem, the inflation problem hopefully will lessen as time goes on, especially if the Fed overreacts. Because right now the pressure from the public is for the Fed to overreact. People want huge rate hikes. They want to crush this now. Not everybody does, because huge rate hikes is going to hurt for people that have loans, adjustable loans specifically, but it will drive prices way down. So people like me, I'm happy about that. The higher they jack these rates up, the better. So crypto, it's getting beat up. It's going to probably continue to beat up. We got to watch the market to see what happens with it. I don't see crypto going up before the market or anything. I see maybe certain currencies that are hedges, looking good. But overall, it's all about Bitcoin. Like, watch what Bitcoin does. Everything else is going to follow it because Bitcoin's the most popular. That's the one that the millionaire hedge funds own. So that's going to be controlling the market. All right, so we've talked about the macro environment, we talked about stocks, we talked about some cryptocurrency. The last thing I want to talk about here is just a couple of philosophical things. All right, so trading is an interest, or the markets are just interesting, right? Economics and the stock market and everything has caused me to think about life and the world in so many different ways. It's opened up my mind to things I never thought about that have nothing to do with money, right? So I think philosophy has a huge role in trading, and it has a huge role in your mental outlook, which is the important part to keep you on your plan and keep you doing the right thing. So the first thing I wanted to mention was that some people will make trades based on very specific small things, right? So I saw a video the other day. It was actually a pretty good video, but when the monkeypox thing came out, a couple of weeks ago or something, when it first came out, there was this hype around it. And he thought, all right, I'm going to look for a company that has a vaccine to monkeypox, and I'm going to jump on in that because I can see this train continuing up, because he was thinking like COVID, right? He was thinking this is going to be a huge thing. It might be the next COVID. I want to get on it early. But as time has gone on, we've kind of seen that, like, okay, it doesn't spread quite as easily as COVID. It's more for physical contact, less through the air and in tight spaces like COVID was. As of this point, it's not becoming the same threat that COVID is, or it has been. So all the stocks that were based on that and popped all got crushed. So this guy put a bunch of money into a monkeypox vaccine stock. I don't remember which one it was. I don't even know if he actually said it, but he got crushed. My point with this whole thing is that you can't just go with one specific slice when you're trading a company. You have to trade the company based on everything that it owns and everything that it encompasses. So yeah, this company made a monkeypox vaccine, but biotechs usually make multiple things, right? And they also have cash flow. They have investors. They have to report their earnings, and they have to show you what they're doing too. And sometimes their tests fail. They have trials like phase one, phase two, phase three. Some of it, maybe it gets locked up in one of those phases, the stock drops, and maybe you're playing the monkeypox vaccine, but let's say they have like something for tooth decay as well, and that's like their big product and it gets denied, right? Like maybe the monkeypox vaccine is a success, maybe it actually becomes more of a problem, but that company ends up getting hit because of the tooth decay thing. Like they get hit for the tooth decay thing, and it cancels out the monkeypox vaccine. So my thought is, when you're trading a company, even if you're going to do a day trade or a swing trade, you have to look at everything it encompasses, because those other things can come back to bite you. And I've had stuff like that happen to me before, which is why I don't like just going on technical analysis or just going on buy the rumor, sell the news, right? Because those things can get you in trouble if you're not paying attention to everything else. So I wanted to make a point to say, like, if you trade something, do research into everything else it does. So maybe you want to trade it because of X, but look at Y and Z as well, and make sure that you're okay with those things, and those things don't affect the risk as much as some of these other companies that are getting hammered. So just be careful with your trades. Just make sure you're looking at everything and not just the one slice of the pie. Look at the entire pie. So that was one thing I wanted to mention. Also, Jamie Dimon, the CEO of J.P. Morgan, came out and was talking about the economy, and I actually have the clip. I wanted to play it a little bit, play a little bit of it for you. He's very uncertain about the markets and is kind of in the same camp as me, thinking that we're probably going to have some downward pressure. And this is a time to kind of see what's going on because we're in kind of an economic experiment. We've never really been at this point before. We've done a lot of things for the first time within the past 10 years, and we don't know what the effects of those are going to be long term. So he's basically saying, be careful with what you're going. I mean, we have all these different risk factors and we have some downward pressure. Also, you don't get out of the markets completely. Like it's not over. There's always a chance for things to come back. And when things are going down, you just got to look at everything and tighten up, make sure, clean up your portfolio, make sure your money is as safe as it possibly can be. Okay, and the last thing I put on here is what is your plan for the market? Right? This kind of goes in with the same thing. What is your plan for the market? Like, even if you're a passive investor and you have somebody else managing your money for you, have a plan. Talk to them. Make sure you know what's going on, and make sure whatever they're telling you makes sense. And if you're trading for yourself, make sure everything you're doing is something that you believe in. Like it's so easy to make trades that you think might go out. Like I think it's a 50-50 trade, right? When the market's going up, 50-50 trades are fine. You can throw money around. It's not as big of a deal. But right now, if it's 50-50, don't do it, right? Even if it goes and you miss out, you feel bad that you missed out. Don't do anything unless you're sure, because this is the time when things get crushed. So make sure you have a plan, right? And the reason I bring this up is because I was having a conversation with somebody about money, and I asked them, "What's your plan for the market right now? We've got these rate hikes coming up. We've got all this downward pressure. We've got so much going on. What are you planning on doing?" And the response was, "Oh, I'm watching the January 6th stuff." And I thought, okay, that's important and all, but that is not going to affect your money the way this other stuff is. And it's not going to affect the economy in the way that everything else is. So you need to have a plan for your money. Yes, there's important stuff going on. But, when I talked to somebody else and their answer was Amber Heard and Johnny Depp. They're paying attention to the Amber Heard Johnny Depp trial. Now, that absolutely has no bearing on your life. That is complete distraction. That's what a lot of companies want. I think like a lot of this stuff going on right now specifically, like why are we having this January 6th trial right now? Everything is lined up like they knew all this stuff was going on. They could have scheduled it at a different time, but no, they chose to make it right now during the biggest rate increase meetings that we had in a very long time. It's to me, it's almost seems like it's intentional to be a distraction. So, yeah, Amber Heard, Johnny Depp, January 6th, everything that's going through the news right now, these are all important, but well, Amber Heard, Johnny Depp's not important, but these other ones are important, but they're also distractions, right? What's affecting you directly, right? These things do kind of affect you in some way in kind of a broad sense, but they don't affect you acutely the way the market does and the way your money does. So get on your money. Think about what you're doing. Make sure you're happy with your plan because most people are distracted. Most people are sitting around going, "Oh, Amber Heard, Johnny Depp." They're not thinking about like, "All right, this meeting's coming up. What am I going to do with my cash?" Right? I'm going to sit there and watch the meeting. How many people are actually going to watch the Fed announce rates? This is boring stuff to them. But to me, this is action, man. This is like an action film. This is the stuff that makes me so excited. This is one of the most exciting streams I've done in a while because there's real important stuff going on. Most of the time it's just what happened during the week and oh, there's some stuff coming in the distant future that we have to be ready for. Well, the distant future is now. The stuff is coming in now. So it's time to get off your ass and actually take a look at what you're doing with your money. Don't just sit there, right? Unless that's your plan. If your plan is to sit there, great, because that's kind of what mine is. Just sit there and wait for an opportunity. But don't just like blindly go through these things. Like make sure you know that this is important and like your money managers are going to be making decisions and trades right now and you need to know like what their strategy is going into that. And my strategy, hold your money, get ready for opportunities. Okay, so I've pretty much gone over everything here. We talked about the macro stuff. We talked about the stocks. We talked about some cryptocurrency. We did a little philosophy. So I'm going to wind the stream down here to a close. It looks like it's actually going to close around 5 o'clock, which is my time, which is kind of abnormal. Normally, I usually go a little bit over. But if anybody has any statements, any questions, any stocks you want to talk about, throw them into the chat. Right now is the time. I really appreciate everybody's involvement. I love the feedback I've been getting so far. It's been so much fun doing these streams. Like I spent years learning about investing and talking about investing to people that just didn't care. Like all of my friends, all of my family, nobody was interested. I was the only one interested back when I started doing this, right? And I was annoying the hell out of everybody with how much I was talking about the markets. That's kind of a lot of people go through that. People get interested in it, especially with cryptocurrency. You tell everybody, you talk to everybody, they get annoyed, right? But now, since the pandemic crash happened and the influx of new participants came in, I have friends and family members that are actually interested in trading and they want to talk now. So it's really wonderful to actually be able to talk to people that care about the markets and care about what you're saying, because everything I was saying before was just crap. Right, or not just crap. It was just annoying people, but it was important, and they weren't getting it because they weren't ready. Now people are ready. What is it? K10 Morker. I don't. Hopefully, I'm saying your name right. Thank you. I appreciate that you like the content. The reason I wanted to do this is because a lot of people aren't saying stuff like this. What else do we have? Great stream. I heard a lot. Now my brain is full. Like learning the drums to 5000 AD. Ha! There you go, man. There's so much to do, so much to learn. I'm glad that I could fill your brain up with some good stuff because right now is a great time to get in. There's so much happening. And if you're new to it, just sit there and absorb everything. Just learn everything you can. You don't have to be an expert. You just have to pick up enough jargon to be able to understand what they're saying on basic financial media. Like you want to be able to go to some YouTube video or turn on Bloomberg, CNBC, and understand what they're saying. It takes a little bit of time, but once you get it, then you can talk to people about it. Then you can watch your money and you can learn everything you need to learn about the markets to be successful. So it doesn't look like there's really any comments or questions or anything like that. It's the last chance to do it. I'm gonna wind things down here. I'm really excited about this week. I'm gonna be streaming live Wednesday, 11 o'clock Pacific, which is what 12, 1, 2, so 2 o'clock Eastern. The rate decision should come out about 30 minutes after that. We'll see what happens. Hopefully, I can get a nice day trade in. That would be wonderful. But I'm a little scared, honestly. I'm trading scared right now, so I may not do anything. But I'm definitely going to watch it. So if you have a chance on Wednesday, join me on that stream. It's going to be boring as hell for most people, but to me, I'm going to be on the edge of my seat. I'm so excited. This is like watching a tied game in overtime. You know what I mean? This is wonderful. But things could get really crazy, and life could change quite a bit depending upon what happens at this. So be ready for this. Be safe. Get it. Tighten up your positions. Get into as much cash as you can. Don't leave the good ones that you like. Just make sure that you're okay if things go down, because that's probably what's going to happen. I would say like 70% chance that after a squeeze, we go down. And that squeeze could last a day, could last a week, could last a couple weeks. I don't know what it is. My thought is it'll probably be a day or two, and we'll see the weight of what happened after that. Although there is a lot of pressure, there are a lot of shorts, so it might take some time to squeeze them out. And the other thing that could happen is the Fed could turn around and say everything's fine. So be ready for either way. Be ready for a bounce. I don't think a bounce is likely, but be more ready for a sideways move or a drop, because I certainly am. I'm ready to start. I'm ready to start moving into my buying a little heavier than I have been, which is wonderful. I'm excited about that. Okay, so I'm gonna get out of here. Everybody have a good weekend. Thank you for joining me on the stream. We got a lot of stuff coming up. Again, Wednesday, 11 o'clock Eastern or Pacific, 2 o'clock Eastern. Join me on that stream. Twitch.com/a stocalypse. Have a good weekend. Be safe. I'll see you later.